It's November 12th, and this is, of course, the video log that takes 30,000 to a million. After I review the account for you, I'm going to talk about removing the ego from your investing and just focusing on what you do and trying to perfect your process. So, here we go. I'm going into the browser. I'm sitting at 127,633. What you're looking at is actually the all-time chart of the account. This is the day chart, down a little bit over $1,700. The positions are listed on the right, starting with the options. This is the ticker, the price of the option, the call, whether it's a call or a put, the expiration date, how many contracts, and whether it's a sell or a buy. The number on the right is the daily change in liability. So I'm going to scroll. You can pause the video at any moment to try to figure out my exact position on the options. Here are the stocks. Apple was down a little bit, but it was not the biggest loser. Realty income was down significantly today, as well as energy fuels, chemical, uranium sector as a whole took a little bit of a hit. And then the energy stocks also took a hit. You can see that ET was down a little bit. Royal Dutch Shell, Schlumberger, or Schlumberger, however you want to pronounce it. Oddly enough, the English, or UK rather, index is over my call strike price of 26.5, so I will be selling that automatically this Friday, which means that my margin is going to get decreased by a little bit, thankfully, because it was starting to get pretty big. Already up at $13,500, and it's a little bit uncomfortable considering we are not at a market bottom, right? So I don't like that. Here's the total return order for the stocks, and this is by equity. As you can see, my top 1, 2, 3, 4, 5, 6 positions are in the green, and so that makes me feel good. Only very few losing positions. Oh, excuse me, one moment. I don't do redos or edits, so I'm just gonna turn off this heater so it doesn't make too much noise. It's getting cold out here in California, okay? It's like dropping below 70 degrees and I'm freaking out. Here's the account, and that's about it with that. Let's go and talk about ego. So one thing that I found out when I was training to be a professional athlete is that whenever I start thinking about, oh, I should be winning this match, or I should be losing this match, or trying to imagine myself as this person that's, statistically better or worse than someone else, and trying to bet, in a way and do odds for myself, then I usually get into this downward spiral because the expectations never really actually meet reality. And it used to take a really big hit on my mental, right? So I figured out that the best way to do it is just to train, to focus on your craft, on your whatever you're working on, and be constructive and not really mind the results. And you want to look at, well, I want to look at, or you, if you're trying something like that, want to look at results as just a data point. So something that you can look back on and you can try to learn from, and then construct your way forward based on that, and try to draw objective conclusions about it, and just stay in the moment and be constructive, right? Instead of trying to stress out about whether or not, I'm going to transfer it to investing now, whether or not your position is going to go your way or going to go against you, or instead of stressing out whether you're making money or not, just try to figure it out. Just plot on a data point, figure out if it's working, if it's not working, why. If it's working, why is it working? How long is it going to work for, you think? Or, try to match up reality to your process and see if you can learn. And eventually you're going to end up, you're going to grow with the market, and you're going to develop your system, you're going to develop your edge. And I wouldn't worry about, little tiny losses and wins, because if you are that invested no pun intended, into your investments, into your account, into your portfolio, I mean, you should probably automate it. Um, yes, you know, sport was my life, and I was extremely 100% invested in it. But you can't look at it as a win or lose, like your life is over, or your life um, goes on and you're victorious, right? It's not like a life and death duel. I mean, it's a lifelong process. And so if you don't have the stomach to learn and to lose money and take those and pay for those lessons, pay for university, right? I mean, my education in the markets was very, very rough, right? I'll tell you a quick story. You know, I started in 2008. This is going to be the first time of sharing this. Started in 2008, and I had some extra money. I've been working a lot, and I'm like, okay, what the hell do I do with this money? Because I've never been trained to invest by anyone. My parents weren't investors or anything like that. They didn't have any financial education. I came from a communist country. That's where I was raised, and so we had, you know, we didn't know anything. So I'm like, what do I do with this extra money? I've never had extra money in my life. I've always been in debt and whatnot. I worked hard to get out of debt, so that was my motivation. And then once I got out of debt, for paying for some college classes and some snowboarding trips and whatnot when I was in high school and my early years, and I didn't know what to do. I've never had cash just sitting in my bank account. So I started, you know, asking people, what do I do with extra cash? I mean, fine, I can buy a car or whatever, but I already had a car. I'm like, maybe I can upgrade it, but the cash just sits there and I'm not spending it on anything. So someone said, well, invest. I'm like, well, okay, invest. So what I do, and of course, the best thing that everybody says is buy the S&P 500. You know, I'm like, what is the S&P 500? So I had to look into that, and I'm like, okay, well, that's a pretty wise thing. You know, it's been going up forever, blah, 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 blah. And so I started investing in early 2008, you know, mid 2008, and I was pretty happy because it was going up a little bit or whatever, staying about even. And then, of course, you know what's happened in 2008 is it tanked. So here I am looking at these huge losses, right? 50% loss. It wasn't that much money, but still, to me, it was, right? It's my entire account. Um, Luckily enough, by the way, oddly enough, I started actually by the almost ultra safe investment. I actually purchased treasuries from the treasury, right? From the United States government. Like I had an account with the treasury, and I had to use this silly code card. I might still have it somewhere with like this password grid that you had to enter into, you know, their website in order to gain like the secret access, you know, to, for them to roll over, you know, the note each month or whatever I had it. I bought short-term treasuries. And so it was very silly because I was getting like $5 a month or something like that, and I was getting all excited. And now I have this, you know, $5,000 or whatever, and I put it on to, uh, because the interest rate went down, so I put it all into the S&P 500. I'm like, okay, I'm gonna get some better return than $1 a month, right? It's ridiculous. And so I dumped it all in S&P 500, and of course 2008 happened. I lost half of everything. And then I lingered on it for a while, you know, until the very, very bottom of like 2009 and 10, or not 10, but 2009. I'm like, okay, well, what do I do now? You know, I have a couple $1,000 left, 2,500. I'm like, well, why did this crash? So I started researching, and I'm like, why did this stock market crash? Was it the housing, right? And so I looked at all these people that were talking about, like, you know, the bubbles and all that, bubbles popping, blah, blah, blah. So a bunch of money started sloshing around, like the whole quantitative easing thing. And, you know, the banks are printing this money to paper stuff up. That's going to be, you know, inflationary. And that totally hit a nerve with me, because what happened in my previous country was I went through a hyperinflation with the currency. So I understood that to the T. I know exactly what life was going to be like, right? So I'm like, okay, here it comes again. In the new country, the paper money, another hyperinflation. And so guess what I did? I just bought a bunch of gold and silver, you know, stocks and you know, ETFs or whatever. So they were just starting to come out because precious metals were becoming very, very popular. And I enjoyed a little bit of gains, and then up into 2011, and of course, shortly after I buy them, the bubble pops, right? And then we have the most prolonged, painful precious metals bull market in many, many years. And of course, I then end up losing everything again. So until I was left with nothing. Like I lost 80%, and I messed around with some other instruments that I lost more money on, and then I don't want to even get into the details, but I got so many things wrong in my early years, and it's just really interesting to just look back on. Not that I'm not going to get anything wrong in the future, but I've learned so many lessons the hard way, just incredible. So there I am, losing 50% of everything, and then I keep investing and I'm losing another 80% in everything. And I just ride it all the way down because I didn't understand why in the world, the mining stocks don't operate like regular stocks and just go up over time. I looked at the HUI index, which is like the gold bugs index, which means the average of like the most, biggest precious metals mining companies in the world. And it looked like it was the same level as it was in the 80s and 70s. So I think to myself, well, it must go up, just like the S&P 500. But it didn't. For 1, 2, 3, 4, 5 years, it just kept on going down. And so I never sold, and I still have a lot of those positions even today because we're actually now in a very precious metals bullish environment. And so they've been going up for the last 5 years. And but I have been trimming them finally. I learned my lesson for the last, maybe 5, 6, 7 years ago. I started learning my lessons. And plus, I had already written that account off. And so, I mean, it's funny to me to look back on it now, but it really doesn't hurt. Like I don't regret making any of these mistakes because I would never have learned, that there are such things as cyclical companies, and that, how treasuries operate, how the bond market works. I learned everything about, stocks, and that I know now because of these mistakes. I would never have been motivated to even look into it, right? So I can be thankful about them and these experiences, and it's made me the person I am today. And I found a lot about myself as an investor, right? I found what works. I found that I'm not smarter than everybody else, and I need a different edge, right? So I learned all these truths in the market, just like in my sport. As an athlete, the sport continuously humbles you as you make more mistakes, as you hit more roadblocks, and it keeps beating you down and letting you know that, hey, you're not good enough yet. Not good enough yet. You still got a lot of work to do. So it's the same thing with investing in the markets. I hope you'll take the story and learn from it, take something out of it, especially if you're a young investor or you're just now starting to invest. Like, there's a long road ahead of you, and if you think you know everything, you probably don't. I mean, I've been investing for maybe 15 years now, and close to 15 years, and I don't know nearly everything. I mean, I spoke about this guy on the last episode. His name was Michael Green, and he was getting interviewed. He was having some kind of conversation about these option structures, and they got so complicated when he was talking about them that it was hard for me to even visualize, like, how would one put this thing on. Right? How does it balance out? How does it fit into the overall picture? So there's still things for me to unpack out there, of course, and I'm nowhere near the professional level of some of these guys, but I keep learning. I know I'm on my path, and that's the attitude that I try to have, is constructive and continuously trying to learn from my mistakes and learn new angles and new strategies or methods or whatever, and improve myself mentally and stuff like that. Luckily, I've already had a lot of mental skills going into the game of investing from sport, right? It's the mental strength, the mental durability is just absolutely required, for investing. It's probably even harder for investors than for athletes. Although, I take that back. It's probably about the same. Okay, look, I've rambled enough. Hopefully you'll found this either instructive, entertaining, or educational. And don't copy what I'm doing here. I mean, you can take some stuff, just like in the sport, you can take some stuff that you like. Like I used to study, I played tennis. So I used to study other tennis players, and you would take something that they do that you like, right? Maybe somebody has a nice forehand or whatever, or does a specific shot or a specific movement with their legs to set up for some type of shots in particular situations. And so I'll take that and work on it and try to implement it in my game, see if it fits in my style, etc. So I recommend you guys do something like that, right? Take something that you like that another investor is doing perhaps and see if you can fit it into your investing style. But you have to match, you have to make it your own, otherwise it won't work. Just like in tennis, nobody's gonna win against somebody else with a foreign style, right? If I copy 1-to-1 the way another tennis player plays, I'm not gonna achieve nearly the same exact success. I'm different mentally, I'm different physically. I can't be like Pete Sampras and just serving volley, right? I can't just be rushing the net because I don't have, the mental aptitude for that, and I don't have or whatever it's called, and I don't have maybe the physique, okay, the propensity, right? That's the word I was looking for. I don't have the propensity to do that. So that's my takeaway. Hopefully you all got some value out of it. All right, I'm gonna end it right here. Hopefully I'll make another video on Monday. I hope that you guys are making a lot more money than I am right now. I had a down day, down $1,700. Kind of sounds like a lot, right? I mean, you can buy some nice stuff. You can buy a used car for that. Maybe a crappy one, a beater, but still significant. All right, peace out.